Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Thursday, September 6th, 2025. September, my goodness, November 6th. Overnight, all all red across the board. These corn down 2.5 cents at 432 and three quarters. Jam beans down 10 cents. They had been down 14 cents. They came a little bit off their lows. Right now they're down a dime, 11.24. We opened on our highs and broke 13 cents. So the bull needs to be fed every day. Just remember that. And we have had a heck of a rally. And again, so many guys out there, they get caught up in needing to be right. I needed to be right. I was right. You were wrong. I could care less. We had a great rally. If you don't reward it, I think you're making a mistake. Period. And rewarding a rally does not mean you're calling the top. It's time to get paid. So that's what I would say. Looking ahead to July Chicago wheat, I'm already looking ahead for next year. We had a bounce in that contract. We had a hell of a bounce, and now we're coming off it. We went from 533 to yesterday's high of 585. 52-cent rally, the highest price we've had since July. So that I'm going to call that, almost a 4 month high. And maybe that's all we get here in the wheat. If you're growing wheat next year, don't be an ostrich. Don't bury your head in the sand and say, "Well, we're at 5-year lows. Forget about it." We just clawed back almost half of what we lost since July. That contract, the July 26th contract, it had a high there in June, July at 650, went all the way down to 533. If we had gotten to 591, it would have been halfway back. The high was 585, so we missed halfway back by a nickel. That's better than a sharp stick in the eye. I know it's not what we want. We all want $20 wheat. I get it, blah, blah, blah. But it was a good rally to use, especially if you're growing next year and you're looking for some sort of a floor, because at least now on a 50-cent rally, all those puts below are a lot cheaper. So, you can buy your puts when they're on sale, and hopefully you don't need them. Buying a put is not a trade. Buying a put is not a retirement plan. Buying a put is defending the value of what you own, period. Guys get caught up, and honestly, if you just wanted to, if you thought you were George Soros or Paul Tudor Jones, you want to call the high, call the low, then by all means, don't hedge, right? Just always be long and take what you get. That's your choice. Kansas City, we had a bounce there. Well, Kansas City, July. Also, I'm looking ahead to July. How much of a bounce did we have? Well, from 530 to 570 and change, 575. So it's 574. So not quite, what we want there. 40 cents. We'd rather get more. But again, that's the highest price that contract has seen since August. So something to take advantage of if you are in the wheat market and you actually are a farmer producer. Let's go see what happens today in the cattle market. We were locked limit down on the close yesterday on ideas that possibly the tariff situation might be changing, because if got to remember this, if President Trump loses the tariff idea in front of the Supreme Court, what's going to happen to the tariffs on Brazil? If those are illegal, all of a sudden, those go away. So that could be something too, as well, putting pressure on this cattle market. Also, too, it was just so overbought and so overdone after 10 months to have the type of correction we've had. And again, I broke it down in my letter. If you're not getting my letter, take a look at it. I do all these retracements. I do all the technicals for you, so you don't have to. But April fat cattle gave back darn near half of the entire rally, which started last November. Last November, we were down at 181. We hit 251. If we did trade 216, that's halfway back. We're at 217 half. So that's the way these markets work. It takes a year to rally, and it takes 3 weeks to lose half of it. That's why we hedge. And to sit here now and say, well, no, the worst is behind us. It's going to turn around. It's going to rally. I hope it does. But in the meantime, you're going to need a hedge, because what you don't want to do is ride it all the way back into the ditch. And if you go back and look at what happened in between 2008 and then 2015, 2014, between 14 and 16, that's when we corrected. So it took 2 years to take away a chunk of that rally, and that was an 8-year rally. We just had a tremendous 5-year rally, which started at the bottom of the COVID thing. So that's all I'm saying. Don't call a top. Defend what you can. There are still some good hedges out there. I bought very cheap uh, fat cattle puts last week, very cheap, which have worked here. So you don't have to go all in. You can get something on paper. I can't stress that enough. So we'll see what happens in the hogs too as well. Hogs have had a similar correction, hitting 4-month lows. You did see Dees, a little bit of buying show up in Dees. This 80 cent level is a big fighting level for December hogs. Going all the way out to the deferreds though, June, July. I'm looking at July hogs. Actually, I'll look at June hogs right now. June hogs technically, again, done a lot of damage. We had a tremendous rally between the April low down around 89 cents. We topped out at 103, 104, right? Guess what? Guess how much we've given back? I'll give you three choices. If you said halfway back, you win. Big percentage corrections there in the meats. And hopefully the worst is behind us. If you've got hedges, roll them down, because if you've got a hedge that you paid $1 for, now it's worth $7. If we do rally, that hedge will go worthless. That put will go worthless. So I'd rather have $1 put go worthless than a $7 put go worthless. That's why we roll them down. We don't roll them down because we're psychic. We don't roll them down because we just want to trade just to trade. If you can roll them down and get paid on that option, that's what you want to do. Because if we do turn around, and if you still own the animals, you'll have higher prices there in the pen. So manage your hedge. That's all I'm telling you. All right, have a good rest of the day. 312-638-88. Excuse me, 312-638-8868. Look me up online, Chris Robinson, robinson.com. robinsonag.com. Sign up for my letter. Take a look at it. You can go month to month. You can buy the whole year. You get every one of my letters. You get all of my cash shell recommendations. You get all of my hedges, and they are just that. They are just recommendations. I don't charge a bushel fee. I don't charge an acre fee. You don't have to pay a consultant fee to talk to me. I've got 33 years plus in the business doing this. I've been working with farmers and producers for 15 years. Before that, I spent 18 years trading for my own account at the Board of Trade in a bunch of different pits. Spent a lot of time in the soybean pit primarily, but also traded a lot of other options and a lot of other markets. So that's who I am. If you're looking for help, give me a call.